Want to talk about a company?
Let's do it.
I don't want to.
Okay. We'll end the show then.
Yeah, show's over. All right, obviously just kidding. Well, let's take a look at, there's been a lot in the news about AI and taking over businesses and corporations and buildings. And, there's been last week there was a lot of pullbacks. We decided to look at C.H. Robinson Worldwide. Oh, what does this company do? Wait, I think I got my things mixed up.
You have C.H. Robinson?
Yeah,
That's the one we're looking at.
that is the one. And they do. They're
logistics.
Logistics, that's what it was. Because I know there's another one we're going to do talk about this. So they're in the integrated freight and logistics. They did get hit as well as the real estate, corporate real estate companies as well. Wow, the short float on this, I don't know if it just happened. It's 8.4%, so that's kind of high. Now, they do have a high PE, so maybe this was warranted that they pulled back. PE starts at 36.5. The industry's at 21. Price to sales 1.1 versus 0.9. Price to book value is high, 11.3 versus 3. We do see price to cash flow very expensive as well, 23.4 versus 9.5. They have a decent PEG ratio, which is your price earnings divided by growth. Tells you how much you're paying for the future growth. It's only 2 versus 5.8. Now the earnings were up 28% of last year. The industry was down 3.1. Sales were down 6.9%, but the industry was up 1%. 5-year growth on the earnings per share growth estimate, 14.6% versus 9.4%, so that's a positive. They pay a decent dividend, 1.4%, using about 50% of their earnings to pay that out. Let's take a quick look at the balance sheet here, see what that looks like. Current ratio looks good, 1.6 versus 1.2, and debt to equity, 0.8 versus 1. We do see a net profit margin of 3.6. That's slightly under the industry at 4.3. And return on equity, very good, 32.3 versus 18.2. And cash flow, they only have about $800 million in cash flow. I say only because the industry has about $3.3 billion in cash flow. Chase, what do you got going forward?
Yeah, and my belief is I don't think they have a lot of the actual physical trucks. I think they're more of an asset light model, if I'm not mistaken. They're more of a service.
A service, yeah, because I was thinking that too.
Intangible.
It's not the J.B. Hunt and the other big ones you see. They actually provide the service to them for logistics.
And I think that was the concern there was, again, this AI wrecked the market everywhere. It seemed like people were just selling, and it doesn't matter, AI, we got to sell everything. And I guess the concern was there's AI-powered logistics software that could eat away at this company's business. There's a couple banks that came out. We got Barclays, and I think J.P. Morgan was the other one. They came out with notes saying they think actually C.H. Robinson will be benefactors from AI, as they've already been working on internal AI to improve their businesses. But looking at the current price, I'm a little bit concerned on the valuation. I'll tell you why. Current price here, $176.01, 52-week range. I mean, the stock's done well, up. Low is $84.68 and the high $203.34. I mean, the 1-year return 78%. The 5-year return, you're up about 100%, we'll call it, not inclusive of any dividend. And the 10-year return, it's done pretty well, up about 150%. But this is where the concern lies. Even with this big pullback we saw this week, you got to December 2027, estimated earnings per share of $7.16, gives us a target sell price of $118.86. I mean, the future earnings of this company are still valued at a forward PE around 23, 24 times.
Yeah, and it just sounds like this company got ahead of itself, and maybe it's good to pull back because it was way too pricey. And when I look at those earnings, I see that the range is pretty wide as well. You got the 26 analysts, the low $5.40, the high $8, so that's not good. We look at the range there. But I was hoping to find something good here because of getting hit like that the stock would be on sale, but it's not.
I mean, this whole AI thing is reminding me of Amazon a few years ago, where I remember Amazon, they're getting into auto parts.
Yeah, malls are going to be gone. Yeah.
Well, but Amazon would get into pharmacy. They get into auto parts. And that particular sector would just sell off on the news. It seems like the same thing is now happening with AI. So I think there are going to be opportunities where people get overly concerned about something. As you kind of brought up already, we're going to talk a little bit about the office space. That might be a sector that was oversold this past week on just news that won't come to fruition. I think there's a high likelihood that C.H. Robinson is fine with the AI changes, but I'm not willing to take a risk if AI eats into their business and they're trading at 24 times future earnings.
Yeah, you got to get the business on sale. You can't, because again, we don't believe AI is going to take away everything. I mean, we talk about that. Gee, if AI does that, Gee, is Elon Musk gonna be the only one that's a billionaire? Well, no, because then nobody can buy the stock because they don't have a job to do that. So things, and we've talked in the past too about how there's jobs that will replace it. I think we did that a couple of weeks ago. Some jobs that aren't even thought of yet that will come out. But things are changing. If you're sitting there doing nothing, you will be left behind. You have to understand what is happening. You can't do the same job that maybe you did 5 years ago. You have to be evolving with the technology.
Yeah, and I hate to say it, but there's a lot of jobs right now that aren't necessarily going to be lost because of AI. There's been a lot of studies that there was a lot of overhiring done in
Right.
the kind of post-pandemic correction, I'll call it. And now people are kind of using AI almost as an excuse to let people go and say, well, AI, and it's making them sound good.
Right.
But in reality, it's like, we don't really need them anymore. It's not the AI, it's just they overhired in many cases.
Yeah, and that's what they did. They overhired, and now they got an excuse to reduce them. And it's just kind of because back then, if you remember, people were so worried, like, oh my gosh, we can't get anybody to work for us. We better overhire and have those people when we need them. Well, now they found a way to get rid of those people. So